Welcome back. The UAE's financial markets are closed today. Trading will resume on Sunday. So let's now take a look at the various currencies, followed by the price of oil and commodities. A surprise end-of-the-week rally across the stock market put the finishing touches on Wall Street's first weekly gain in a month. The rally came in wake of comments by Federal Reserve Chairman Ben Bernanke. He pointed to a disappointing weak recovery, but did not signal further quantitative easing or QE3. Bernanke, however, says the Fed will meet in September for 2 days instead of one to explore policy options that could fight high unemployment. Meanwhile, investors kept an eye on Hurricane Irene. Early projections say Irene could cause tens of billions of dollars in economic losses. For the week, markets shook off early losses to finish solidly higher, led by a 2.5% gain in the Nasdaq. Experts were perplexed by Wall Street's strong reaction.
I don't know what they're seeing. Some people, I take it, are reading into the fact that he said there's going to be a 2-day meeting, that maybe with 2 days they'd come up with something. But I think the Fed is at a point where there's nothing new for them to come up with.
Warren Buffett will invest $5 billion in Bank of America, stepping in to shore up the largest bank in the US, in the same way he helped prop up Goldman Sachs and General Electric during the downturn. The jump also makes the warrants for Bank of America shares that Buffett gets in the deal instantly profitable. Bank of America has been plagued by fears that bad mortgage loans and legal liabilities from loans packaged into bonds by its countrywide unit could drag it into tens of billions of dollars in fresh losses that would stretch its capital. Bank of America will also sell Berkshire 50,000 shares of cumulative perpetual preferred stock with a 6% annual dividend, it said. Currently, the bank has $400 billion in total excess liquidity, and the company could meet all of its unsecured debt obligations within 22 months. China has declared confidence in the euro, while French Finance Minister François Bayrou dismissed talks of a eurozone bond on a trip to Beijing. And China's leaders are currently certainly banking on the eurozone's success. A quarter of its $3 trillion of foreign exchange reserves are in euros, and China wants quick action to secure its investments. But so far, the French President and German Chancellor Angela Merkel have put on hold what many investors say is the best solution for Europe, a common eurozone bond to give weaker member access to cheaper funds. In Beijing, the French finance minister stated that his first priority is the application of the national plans. Spain has reached a political consensus to set constitutional limits on its public deficit and debt, though there were few signs the accord would persuade markets. 1 in every 5 workers in Spain is unemployed and now must cope with government spending cuts as well. Regardless, the Spanish government is pressing on with what it sees as necessary reforms. On Friday, it gained political consensus to set constitutional limits on the country's debt and deficit levels. The deal saw little change in the price of Spanish debt. The Spanish Prime Minister aims to cut Spain's budget deficit to 6% of GDP this year, down from 9.2% in 2010.
This measure of putting a legal cap to deficit, budget deficit in the Constitution may help in improving Spain's image. The problem is that we are assuming that the markets will react rationally, and for what we have seen in the last few years, and actually in the history of humankind, markets are not that rational.
And up next, we have the day's sports news for you, so stay with us.